This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. And one just hopes that after last week's pain and a little bit of down and down kind of market that we had, this week brings a little bit of stability. That's what we can hope for, at least to begin the week. I'm Prashant, with me my colleague Sonia and Nigel. Guys, good morning.
Hi, good morning Prashant, good morning Nigel. And such a dichotomous market, right? On one hand, the Dow saw its best week in so many years. And for us, our own markets have been under so much pressure. So clearly, maybe decoupling is what the Indian markets are seeing.
Well, I think it's temporary and only in the near term, right? Because we've got a big political event that's up ahead of us. And after a while, last week, the Nifty, in fact, underperformed all the Asian markets as well as the global market. So I think we have volatility for the next 10 sessions on, and then we continue uptrend.
Election results are early June.
Yeah.
So I think, till that point, you perhaps are... it's a bit of a constraint, right? I mean, there's no real big, anything very big which is perhaps going to happen till that point on. That's the broad kind of message from out here. Well, let's just take a quick look at what you need to know as we begin another session. And we'll pick up from where we left off on Friday, because on Friday, we supported and sort of defended an important trendline support. That chart that we put up all day on Friday. And the low was 21,930. We didn't break that, and which means that is still very much in play. So the Nifty, it left off in a way that it was a positive daily close as well, which is also a good thing. So I think it gives us something to look forward to. Now, global cues remain very supportive, but it's not that it's mattered too much. The S&P was up a little bit. The Nasdaq was down. The 10-year bond yield was up 5 basis points. And you also had the dollar index, which is just above the 105 odd levels or so. So day on day, maybe... a little worse off looking at yields and dollar, but not very much really. You also had the University of Michigan sort of consumer sentiment data which came through. It was weaker than expected, but the inflation component of the data was stronger than expected. So, there you had and I think the inflation number, which we will get later this week, which is on Wednesday, the CPI number, perhaps is the big data release, which I think is going to be pretty important for the Fed meeting as well. So 0.3% month-on-month increase in core CPI is already baked in. Anything more, 0.35, 0.4, and then you perhaps get a bit of a negative surprise here. Otherwise, I think at 0.3, that's in the price. On Friday, another thing out of the blue, right? US-China tariff kind of headlines dominated a lot of the media. Wall Street Journal, Bloomberg, they all reported. And one thing kind of stood out. So essentially, the report suggested that the Biden administration of the U.S. is looking at imposing very high tariffs on green exports out of China. And one of the sort of important things of green exports is EVs. The Biden administration could be looking at tariffs of 100% on Chinese EVs. The Chinese EV ecosystem, of course, is far ahead of pretty much everywhere around the world. And this is something which we are picking up. Now, will this once again escalate into a trade war, tit-for-tat kind of a reaction? Or will this be very targeted? And we're still, by the way, 6 months away from an election. But China tariffs remain the number one talking point between both the Republicans and Democrats. Here in India, there is, of course, a big political event. Today is the 4th phase of Lok Sabha elections. 96 seats go to vote. I think, we're already, by the way, at 283 seats, right? 283 done and 96 today. So it's a big phase, and we'll talk more about this one as well. A lot of the focus, of course, in the last 3 phases has been on turnout, etc., and so much interest around how this is going. Now, just to circle back and tie in the levels here, you basically need a confirmation that the market perhaps is going to respect that trend line support at 21,930 or so. And how will you get that confirmation? By building on. And the index first needs to cross the 22,281 level. That's the 40-day exponential moving average. And then, of course, the 20-day comes in at 22,368. These are, again, all very near-term levels that we are looking at. And, of course, we should not break Friday's low, which is 21,932. That's also the trendline support. and that's an absolute minimum that the market should respect. Bank Nifty has trendline support, similar kind of level. It did not make a low in Jan, but in February, that number for the Nifty Bank is 47,225, same levels we put out on Friday morning as well. And on the Nifty, on the way up, Bank Nifty has resistance at 47,791, which is the 40 hourly, and then the 20-day moving average, which is at 48,265. I think easy does it. Slow and steady, watch the market. In any case, I mean, the index has been doing what it is doing, but so much and wild and big reactions to earnings, right, which have been coming through as well, which we will discuss as we go along. The start is down another 40 points this morning, but I think we'll have to see what that changes to by the time we open at 9:15. Sonia.
Absolutely. You know, it's better to be cautious in this market, given that we have that big political event upon us. And also the market has been showing some signs of weakness over the last many days. So let's just take it straight to the implied opening for now is suggesting a 40-point cut. So it's not going to be a good opening at all. There's been large foreign selling in the market, right? And that is something that I think has worried the street quite a bit. If you look at it, FIs once again sold about 2,000 crores in the cash markets on Friday. And put together in the month of May so far, FIs have sold almost 25,000 crores. So the old adage, sell in May and go away, is pretty much playing out in its entirety in the month of May so far. But the good part is on Friday, we held on to the 22,000 mark. So let's see if that becomes a line in the sand for the market. The US markets have been very stable, and we were talking about the dichotomy there. Most global markets are doing pretty well. The Dow, in fact, saw the best week of the year last week and was up about 125 points on Friday. So we have been decoupling from the US markets. It's largely because of the election jitters. But even if you look at what individual stocks are doing, right? Tata Motors came out with its numbers on Friday. The management commentary was quite cautious. They guided for flat margins in FY25 for JLR. They spoke about most global markets seeing some pain. And that, I think, may not go down very well with the street, considering that the stock has rallied quite a bit as well. Tata Motors says they remain cautiously optimistic even on domestic demand, and they expect H1, the first half, to be relatively weaker, which means that they're facing headwinds both in global as well as in local markets, and that could result in some sort of pressure on the stock. On the flip side, though, Eicher Motors, I'm expecting, the stock to perhaps be stable because there were no surprises in the numbers. It was a strong operational performance. The margins went up 270 basis points year on year at 27.6%. Now, in terms of earnings today, you have stocks like JSPL, Zomato, UPL that will be announcing their numbers, and important ones there, considering that stocks like Zomato have rallied a whole lot. But largely, you'd have to say that this is a market that has been trending lower. The Nifty Bank has also been under a bit of pressure for the last many weeks and months. So maybe you could see some more, trepidation over there. And as we head into the June 4th event, the counting day, the market volatility is something that can continue.
Well, that's right, Sonia. And just take a look at the India VIX. The way that's been surging, tell you that there will be volatility, till we get those results. But let's focus on today's trading session then. I think the Nifty is in that broad 500-point range odd, and we'll have to keep an eye out on that mark. The Nifty Bank, that holds the key. That's been on an 8-session losing streak, and that needs to see a bit of a bounce. For the bulls to have any kind of hope, the Nifty Bank didn't participate even in the pullback that we saw on Friday, and that holds the key. At one point of time, remember, it was up close to around 300 points odd. What did the FIs do? Well, this time it was even Stevens. They added longs as well as shorts, 20,000 contracts apiece, and now the short positioning is added on 66%. In absolute terms, it's holding around 1.6 lakh contracts. But as I told you all, even in Friday's trading session and Thursday, that on a like-to-like basis, it's still not at that 1 lakh contracts. Why is that? Because the lot size itself has changed. So effectively, this 1.6 lakhs contracts is, if you compare it with the earlier lot size, it'll be around 80,000 contracts. So we're still not at that 1 lakh contracts, but a net short market is something that I like. And that's something that will hold, the bulls in good stead if, in fact, we do see a bit of a bounce. Let's focus on the options data. And that 22,000 put, well, that's seeing a fair bit of writing. And that's going to give the bulls some bit of a hope because the premium has come down to around 120 odd. That's telling you that the bulls want to defend those lower levels. 21,800 odd, they believe that they can defend that. And that brings us to the levels, because 21,800, that's closer to where the swing low is. So this is a crucial mark on the downside. And the bulls don't want this to get breached. While on the upside, the 22,300, 22,350 mark will be a bit of a resistance zone. And we have the 20 and the 50 DMA as well out there. The Nifty Bank, that's in a broad 1,000-point range out there. And you don't want it to, break this 100 DMA on the downside. It's on an 8-session losing streak. You wanted to get some kind of momentum, gradually move towards around the 20 DMA. And that holds the key even in today's trading session. Focusing on stocks, I'm tracking two stocks. One is ABB India. a few sessions ago, we had highlighted that there was long build-up out there. There was delivery-based buying as well. So, and now we know, that in fact the street was sensing that maybe in fact those numbers were much better than what the street had. We'll have to wait for the analyst call as well. But the margins came in at record high. The gross margins are around 40%. That's the best in history. So ABB could be the stock of the day in terms of result reactions. And in terms of a cash market stock, well, Thyrochem, one of the biggest underperformers of the recent past. I think the stock is half of what we saw a couple of years ago in 2021 or so. But in Friday's trading session, massive delivery-based buying, more than 5 lakh shares getting delivered. It's the highest we have seen since December 2022. So that's a stock I'll be looking at. And if you look at it technically, at around that 630-odd mark, well, you have the crucial zones, the 20 as well as the 50 DMA. So it's at a crucial support zone. It's seen delivery-based buying. That's the cash market stock that I'm going to be looking at.
Okay, thanks a lot for that. So lots of stocks in focus this morning. But on the equities front, first up, we have a comment coming in from Mahesh Nandurkar of Jefferies, who says that the March quarter earnings season so far has seen their analysts raising FY25 earnings for more than half of the 88 companies under coverage. Results season highlights include improved rural outlook, weak IT guidance, growth restraints by banks and strong property markets. Mahesh adds that heightened near-term risks drive tactical model portfolio changes, i.e. weight cut on industrials and mid-caps like KEI and NTPC in the PSU basket, and added weight to staples like Marico and Godrej Consumer.
Okay, well, let's get you some money market views here. On the rupee, we have Kunal Sodhani of Shiran Bank, who says that Fed officials reiterated the longer for higher mantra, supporting US dollar against its peers. US CPI to take the center stage this week with expectations of 3.4% year-on-year rise. Dollar index continues to find support at 104.75 levels. For the USD INR, he says 83.42 to the dollar is going to act as a support, while 83.6 to the dollar will be the resistance.
And on the bonds, Ajay Magnolia of JM Financial says that yields remain stable in the absence of any directional triggers. Announcement of another round of buyback for 60,000 crores to infuse liquidity may upkeep the sentiment. CPI inflation data is due today post-markets, which is expected to come in at 4.8%, and this may fuel a rally in bond yields. Expect the old 10-year benchmark to trade in a range of 7.09 to 7.15%, and the new one in a range of 7.04 to 7.10% range for the day.
Well, we're going to be focusing on a lot of stocks, action-packed week over the weekend. But for the time being, let's run you through all the top 10 stocks that we're tracking for you. We're looking at Eicher Motors, ABB India, Kalyan Jewellers, Thermax, Viral Pharma. All of them will be reacting to positive news flow. Add to the list BEML and Jupiter Life. All 7 stocks will be reacting to positive news flow. On the flip side, Tata Motors, APL Apollo Tubes, and JK Cement will be reacting to a rather weak set of numbers.
Okay, all right. Well, that's the stocks list to watch, and we'll get to more in this in just a bit. Matt.